In this video, traders, we're going to look at Jesse Livermore and learning from his failures. Stay tuned. Hey traders, warm welcome to you. Alright, so Jesse Livermore, Reminiscence of a Stock Operator. You have probably read the book, if not thoroughly recommend it. It's one of those books where it talks about the life of Jesse Livermore, a famous stock speculator, went from pretty much zero up to one of the top 10 richest men in the country, and then lost it all in a space of 5 years after that. And that's the part I'm going to focus on. Now listen, the money he made, there's a lot of good lessons for the money he made. And unfortunately, he wasn't the type of trader who was able to keep it. So, you know, whilst a lot of traders put him on a pedestal and this and that because he made a lot of money and he did have a lot of good attributes in trading, he had a lot of kind of weaknesses that really became his downfall. But the irony is, of course, is that those weaknesses were maybe what helped him make his money. So maybe he wouldn't have made his money if he hadn't had these weaknesses. He's swinging for the fences quite a lot and all this other stuff. But anyway, regardless of that, I want to focus on the kind of loss from, you know, big levels of money down to zero, and how we can avoid that ourselves. Because guys, I've heard more than once stories of traders who have made substantial amounts of money, not necessarily in trading, but in other venues as well, and then have lost it again. I know traders who have made lots of money and lost it again. Also know people who have come into the markets having, you know, built a business over a lifetime and then lost that money. So let's just be careful what we're doing here. So the first thing is to remember what he did. So in today's money, he made like over $1 billion, 1.2, 1.3 billion. It's $100 million. So basically worth about $1 billion plus today. And he went from zero, declaring bankruptcy in 5 years. And ultimately, the guy shot himself. So, you know, we'll be very careful about we study him too much and try to replicate some of the things he did. Some of the things that were very good, but obviously, you know, you don't want to be losing the money and definitely don't want to be killing yourself. So let's look at some of the things that went wrong for him. So the first thing is, you know, don't risk all your money. You know, one of the things that he definitely obviously did here is he risked everything to make so much more. And that was probably one of his biggest downfalls. That was maybe what got him to where he was, but ultimately he was risking so much money. Listen, if you've made good money in the market, by all means leverage on that by trying to make more from the money you've got. Of course, it's a compounding effect. But also, number two, we'll put it into one, is take some money out and diversify a bit. You know, put it into another business, put it into property, or listen, not recommendation guys, but you get the idea. There are plenty of other vehicles where you can put your money that can work for you. You can store wealth in other areas. You know, keeping it all in your trading account is a recipe for disaster, especially, you know, if you're a level of $1 billion plus, you know, but obviously much less than that. You can still go, okay, you know what? I've had a good run. I don't need this much to trade with. Why don't I, diversify a bit, because I just don't know, I'm reliant on me performing here. Why don't I diversify and invest in this business here? Why don't I invest in this? Why don't I invest in that? Why don't I park my money here? So not only does it protect against you not performing, but it protects you against losing everything. You know, because you know what it's like, guys. If you're trading on tilt, Jesse Livermore was probably trading on tilt for 5 years. He didn't snap out of it quick enough, and the market will take whatever you've got to throw at it. Whether you've got 100 quid or whether you've got 100 billion, it will take it. You know, the market can swallow any size you've got. So, you know, making your profits, and at some point, you know, just going, you know what, it doesn't harm me to take some out, diversify a little bit, and keep this as a pot. I can still trade what I want, I can still do what I need to do, but I'm just kind of reducing the risk. Another thing is have a trailing stop drawdown. So, you know, whilst you're making money, it's great, but always have a trailing stop, almost like a moving average on a chart, guys. You know, your equity curve is doing this, your moving average is doing this. When you come down, you hit your trailing stop. Let's say you've drawn down from 1 million down to 800K, or whatever it is, 100K down to 80K, 10K down to 8, you get the idea, order of magnitude doesn't matter. Let's say we've drawn that down that much, you go, right, I'm going to stop for 3 months, because obviously, you know, small drawdown, fine, you've probably got that in your trading plan or strategy that you take a step back, but big stops, like here, I've taken a big drawdown here, something's not working, something's not right, I don't like it, I need to reassess. And in that time period, you reassess and go, you know what, maybe you're pushing too hard, maybe the market conditions aren't right, and you can perhaps take a bit of break and go, you know what, I'm going to come back in 6 months, refresh, regroup, or I'm changing my strategy. But it just puts that mental kind of break on things rather than just going all the way up and all the way down, all the way down, like Jesse Livermore did, all the way up and all the way down again. So I think is set rules and stick to them. I know easier said than done, talk about sticking to rules and discipline, and it does get frustrating when you kind of hear people constantly going, just stick to rules, stick to rules. Is that we think about how we can stick to the rules, how we can be more disciplined, how we can have the right mindset, not just doing it, but how. And so yes, having rules is good, but we also have to have little tricks and hacks and ideas of how we stick to those rules, rather than just saying, I will not do this, I will not do that, because we're just going to break it. So it's those little things like that. Final thing, guys, is respect the real risk of trading. This cannot be stated enough. You know, the market, I alluded to earlier, the market will take whatever you've got. You've got £100 to spend, the market will take that. You've got 100 million, the market will take that. It will play at whatever level you want to play at. And so the risk is identical regardless of what. Now you can get into a position, I can imagine if you've got $1 billion in your account, you probably feel pretty comfortable. I'm invincible now, I'm set for life. But if you choose to risk that in the market, 5 years, it can easily disappear in 5 years, because you'll be playing at a higher level, you'll be playing at increased position size, you'll be trading differently, but it won't take you long to wipe that out. You could lose 100 million quite easily in a month if you had bad trades and you were trading a decent size. And so whilst the order of magnitude is probably way out of traders' reach, if you like, but imagine if you went up to whatever level you're playing at, maybe you made a couple of million. Even if you've made a couple of million, you can't just sit back and go, you know what, I've made it now, because the market will take it all off you in an instant. The point is, guys, you've got to be very disciplined still and respect the risk and go, you know what, I need to keep on the ball here. Just because I've got a bigger pot to play with doesn't mean I've suddenly made it and I'm suddenly can do what I want, because you're a meaningless fish regardless of whatever money you've got. The market is huge. So you're sitting there with a couple of million quid thinking, I've made it now, I'm a professional trader, blah, blah, blah. No, the market will take it off you if you don't respect the risk the same way you did when you started off with your 10 grand pot or whatever it may be. So understanding that, hey, if I diversify, great. I need to respect the risk. I need to understand the market will still trade as it is. I will automatically be increasing position size because you've got more pot. There's no point in trading the position size. You're trading with 10 grand. If you're trading with £1 million account, you're going to adjust it, because otherwise there's no point. Otherwise your growth is going to be so small, you're going to waste your time doing it. And so the market, it's a linear risk. It just goes exactly the same. And so bearing in mind that there's no real comfort in account size, it doesn't give you any less kind of some sort of suit of armor or some sort of shield, because you're playing at a higher level anyway. So always respecting the risk, always understanding that, hey, at any point the market can do whatever it wants. And so as long as I'm positioned and I understand the risk in the trade I'm taking, and I'm comfortable with it, then fine. But if I neglect that, then it can come back to bite me. So those are the things, guys. We're diversifying, trading stop and drawdown, having rules and stick to them. Don't risk all your money. It doesn't make any sense just to go crazy with it and risking all of that, and respect the real risk of trading. Otherwise, good, enjoyable book, but sometimes we've got to think exactly what happened. In Jesse Livermore's case, it didn't end well for him. So let's learn from it. Take care, keep this managed. Bye-bye.